Stacking Up today. Dan Passarelli of Market Taker Mentoring joins me for a closer look at a retail name. Now, Dan, we've had a number of retailers reporting in with earnings, including Target and Sears and Kohl's, but you're taking a look at the biggest one of all, which is Walmart. Do you see a potential trade here?
Yeah, Walmart's been a really interesting stock to watch. It gapped down pretty significantly after earnings, a pretty big gap, and now it's kind of poised for a comeback as far as what I see. The stock has risen back above the 200-day moving average, and that's a really significant level. The 200-day moving average can be either a support or resistance level, depending on which side of it the stock is on. So right now the stock is above the 200-day moving average, so that's support. So I'm looking for a move higher.
How much higher would you say?
Well, I think it can move pretty significantly higher. So the trade that I'm looking at doesn't limit its profit potential. Now generally what I do is I like to put on spreads because I can hedge off implied volatility, I can hedge off time decay, and I can make the trade less expensive, therefore less risky. I'm keeping it nice and simple here.
Okay, we like simple.
Yes. With low implied volatility, all I'm doing is I'm buying the April 65 call.
Okay.
The reason I'm doing that and not spreading is because implied volatility is so low, the options are already pretty cheap. So I don't really feel like I have to spread off the risk anymore because it's already really limited risk. And if the stock goes my way, if it rallies, which I think it will, I don't want to have that spread on that limits how much I can make. So if I get a really good pop, if Walmart's strong and the market turns around, I could have a pretty leveraged profit on this trade.
So the implications in Dan's trade is that he believes Walmart stock will be trading above $65 by April and the April options expiration.
Yep.
Sometimes a down stock is a good stock, so good to have you here. Thank you, Dan.
Great to be here.